So today I want to show you a cool technique that works pretty well for improving your win rate, improving your entries, getting in the market at the right place, and kind of stepping away from a lot of bad trades in the market. So we'll dive right in. Very simple trick, but will make a big difference in your own trading. Alright, so quick reminder before we jump into the video here that we are about to reach 100,000 subscribers on YouTube here. We might have reached it already, but if you're not subscribed yet, it will mean a lot if you click the subscribe button. Click the bell next to it to be notified if you see videos as well. And hopefully I can reach that target, kick off a very nice celebration I've planned for this 100,000 subscribers here on YouTube. And yeah, it will be awesome to have you part of this journey, of course. Alright, so this is something I've been testing for a long time, and I kind of find much better stats with using this entry technique compared to what I've been using before, of what you might have seen in different books, different websites, different coaches say. It's a way where you kind of enter a little bit later in the market, but you do get much better win rate and a lot better entries in that case in the market. So what do I mean by this? Well, it's very simple. Okay, as you see on the chart, I have all these triangles here are going to be signals for me. Now, some of them are with the Bollinger Band. These are the blue ones. They're the most reliable one. Some of them are the red and the green ones, simply based on engulfing candles. Very simple. No other rule, just engulfing candles in the market. Okay, they got to be strong. They got to fit my criteria. They're stronger than the way most people look at them. But that's how it works. Okay, as you see, I've got a trade here recently on Euro AUD, and this is a short. So based off that level here, 1.64 is a resistance area on Euro AUD, and we have price here kind of playing at that level a little bit. Got a couple of signals that we could have entered, of course, but then we've got this one here that was matching my criteria. So we have this candlestick, engulfing candle. Now, not at the top, of course, but somewhere in between. I entered below the low, a few pips below. This is a 1 hour chart. Stop loss above the high. Ideally, I will put it here, but in this case, I kind of felt because we had these highs before, I want to put it above the high. So we went just somewhere around here. And then my take profit was simple. Half at 1-to-1, which is somewhere over here, and the other half at 2-to-1, which is somewhere over here. Now we're about to reach this one. We'll probably be reached in the next few hours. But the 1-to-1 was reached quite quickly, in about 2-3 hours from that at the target. Actually, the 1-to-1 was a little bit lower, I remember. We had this candlestick here, and we kind of went somewhere around here. Okay, so now this trade is using my entry techniques that work pretty well, and we'll kind of go through that. So the entry technique is very simple. We want to enter any candlestick, any trade, beyond the high or the low of the candle we enter. So if I want to enter on this bullish engulfing here, which I won't because it's against the zone, I would want to enter here just above the high. And I'll show you in a minute why that makes sense and why that's good. If I want to enter this bearish candlestick here, I want to enter just below the low of this candlestick. If I want to enter here on my trade, I want to enter just below the low of my engulfing, which I believe we had a wick, so somewhere around here. Below the low. Okay, just a few pips below the low. If you scalp, if you like really more a day trader, it could be just like 1 pip or less below the low. But if you swing trade like me, it can be just like 3, 4, 5 pips is fine in that case, okay? So this is kind of what we do. Now if I want to enter beyond this candlestick here, which is a big one, I have to enter here above, okay? Now, what does that mean and why is it important? Well, a lot of times we have a bullish signal. So let's say a bullish candlestick, and that seems like a very strong signal. We want to enter on that candlestick, we want to go in, but then as soon as we enter and put our entry here, price will just reverse on the next candlestick and then go down from there, okay? And we kind of miss out on the move. Now, this is not very clear here, but pretend that's a bearish candlestick here, and price will just kind of go down from there, okay? So we kind of completely missed our move in that case. We want to enter here because we expect price to go higher. In the end, price just like reverse next candlestick, and we get stopped out because price didn't break the high of that engulfing candle or that bullish candlestick. So that's where the method comes in. Now, if you take these trades, your win rate will go down by a lot. Yeah, sure, you enter a little bit early, you catch a few pips, maybe more, but that's not worth it, in my opinion, for a big decrease in the win rate. So the way this works is it's very simple. Just enter beyond the high of the low of the candlestick, a few pips beyond that. If price reaches there, the chance of having momentum is much higher. And to show you this, to prove you this principle, I'll just go in. I'm not going to take like many trades, but I'll go back in the past. Let's say somewhere like here. And now here we wouldn't be trading in that kind of area because price is not in a resistance area. But once we get closer to that level, okay, we have this setup here. See if you entered this setup, even though it's quite low. Okay, if we just went here, and I'm going to take off Bollinger Band to make it more clear. Okay, here we go. If I enter just this candlestick here at the close, right? Enter here, boom, stop that next candlestick. If I put my entry just a few pips below the low, right, not triggered, and price continue up. So we're good here. We save some money, which is a good thing. Now let's see the other setups coming into this market. Okay, here, same principle. Well, this is one where you cannot avoid all the losses, but still, enter below the low, Okay, boom, stepped out somewhere here. Okay, that's fair. It happens. But at least we kind of saved this loss before. Next one here. Okay, below the low. Stop loss above the high. Now this will be a big one. We might see how we want to do this exactly. That's been not a loss yet, but we're in a loss a little bit. This one here, below the low, above the high. Okay, stopped out. Okay. Now, of course, we would filter these setups a little bit better. I filtered them myself with Bollinger Band a little bit better, so I can avoid most of these setups, I believe. And the way to do this is very simple. If I'm going to take a sell trade, I want to have it at least above the middle band of the Bollinger Band. Ideally closer to the top, somewhere here, but not below in this area here. Okay, that's where I want to avoid some trades. So this one here would not be taken. This one would not be taken. This one could have been taken. It's a little bit like on the line, so up to you to decide that. But for me, I kind of filter it a little bit better here. So, but for this video, I still show you all the trades because I want you to see like how it looks like and how many losses we can save with this technique. Next one. Okay, another one here. One enter below low, stop loss above the high. Let's do this. Boom. Stop loss here. Okay, this one stopped out. That's fine. That's all right. This one was still in the trade. Okay, another one here. Stop loss below low, not triggered. And the key thing is you want to, if it's not triggered next candlestick, you want to ideally cancel it. It shows you there's no enough momentum in the market to kind of keep you in that trade, so you want to get out. So here we're not triggered this candlestick, then we just get out and we wait for the next trade. Very simple. We avoided a loss here again. This one here, same principle. Below the low, not triggered here on next candlestick, we cancel the trade. Okay, we avoided a loss. Okay, trade going nowhere. Okay, let's see what else we can come up with. Now we got a loss here, of course. This one was triggered. This was not even a good trade because of the filtering I have with the Bollinger Band. But still, keep going. These bullish trades, I'm not going to take them here, but you can see how these trades here will not be triggered because we went to above the high, price doesn't go there, above the high, price doesn't go there. So it helps us to kind of get out of even the bullish trades here, which is a good thing. Okay, now this one, below the low, okay, above the high, triggered. We might get a 1-to-1 on this, maybe not, close to it. Okay, that might have still been a fairly bad trade, but we'll see why. Here, below the low, above the high, stop loss. Okay, here we catch the move. Right, at least a 1-to-1 in that case. Yeah, easily a 1-to-1, which is not bad. Now here's another one where it would be not triggered. Below low, you can see this one is a bad trade. Will not be triggered here. And this one here will be triggered though. So somewhere here is stop loss. Okay, that's why we catch the move here. Right? We got a probably 2-to-1 easily on this one, which is good. Like that's what we want to have, of course. Okay, now this one here, we don't want to take the bullish trade because we're against a resistance area over here. This one is a resistance. Okay, so we don't want to be getting into bullish trades here. Okay, so far, this one here, gonna enter below low, stop loss below the high. We got an easy 1-to-1 on this one, maybe more. If our stop loss was well placed, we could have kept in the move again and be good. This one here not triggered, and this will make our stop loss too big on this candlestick over here. That's good. And this one, of course, here is triggered. So if I just look at this, almost half the losses, we avoided them by kind of having our entry technique. Now, we didn't use any kind of filtering. We just used engulfing candles, which I don't recommend you use by themselves. They're a good tool, but they would not be enough to make your whole strategy out of. But if you just look at this way, and without any kind of filtering, we would have avoided at least 4 out of 9 losses here, which is very good. Like that's a very good increase on our win rate. We would have avoided at least 5 losses here just in this example right there. So that's a good progress from just being able to enter anywhere in the market with like at the close of the candlestick. Very risky. It could work sometimes, like in the case where we actually have a good trade, it works to enter earlier on that move. We have a smaller stop loss, like this example over here. But that's a lot more risky. If you want to have a higher win rate, you want to be able to win more trades, this is a technique you need to use. I've been testing this for a while. What I see is about a 63% increase in my win rate just by using this technique. And you could get some results using this as well. So if you want to learn more techniques about how this all works to be able to improve your win rate, get better results in trading, and become profitable the next 8 weeks or so, I'll leave a link below for the details of that so you can check it out. You can learn more about how we can work together, how I can help you to get better results, and scale up your trading the next few months, and eventually make it your full-time thing if you want to. If you want to keep watching videos, check out my video here on how I trade with the Bollinger Band. You'll be able to learn my whole strategy in details, things I do, and kind of start trading it on your own if you want to, and learning how this all works. Again, I would love it if you leave a like on the video, give me your thoughts in the comment section below, and I will catch you back here in the next video pretty soon. Ciao.